Right, many thanks. Gladys rightly put there that we were looking at significant fiscal measures proposed by the president yesterday. Of course, these have to go to Parliament, as Kennedy Morathi already mentioned, because a finance bill has to be tabled for some of these tax proposals to come into effect. And I'm joined by Robert Wairuru, the Associate Director of Tax and Regulatory Services at KPMG. Welcome on set.
Thank you.
Just to take a quick deep dive, I was one of the people who was skeptical about the room that was allowed for the government to make some of these tax proposals. Yesterday was a big surprise for me. Were you surprised by some of the measures you saw President Uhuru Kenyatta table?
Thanks, Julian. I was not really surprised because we really expected this kind of measures to shore up the economy. And for me, I thought that was quite bold of the government to come out so fast. As a matter of fact, in Africa, if you look at the countries that have announced economic stimulus packages, like Kenya has, I only know of South Africa and Mauritius. So this is quite good of the government. There were quite some bold measures included there. And I'm not sure we shall be talking about some of these issues, including the impact of some of these measures on tax collections in the long run.
I see. And the tax waiver, 100% rather, tax relief for persons earning 24,000 shillings and below, quite a major boost. That was one of the highlights for me. When you looked at the raft of proposals being made, what were the highlights for you?
So I think for me, two key highlights. One is the proposal to release a lot more money into the economy by government. And this is through KRA VAT refunds. That's a big one, 10 billion shillings into the market. And then you've got the government also paying bills. So for me, I think the injection of these funds into the economy creates liquidity, the much needed liquidity that we need in order to spur spending in the economy and continue with enterprise. That for me was a big change. And of course, VAT is also an interesting one.
And now that brings in the question, there are two issues here. What's the effective date for these proposals? Because some are already asking us, for example, the revision on PAYE, that is pay from 30% to 25%. Does this come in the March salaries, or when do we expect to see this hit our accounts?
Now you see, Julian said, this is where we said that the devil is in the detail, because if you listen to the president carefully, he said with immediate effect, or to immediately implement these solutions. So that would suggest that the March salary would benefit from this kind of tax breaks. However, legally, this has to follow a process. We've got to have the National Assembly approve these changes, because this is an act of parliament that has got this provision. So we need a change in this. And like somebody said earlier on, we need Parliament to come back from recess and discuss these things. The good thing, though, is that I think, given the urgency of the matter, we are likely to see these changes happening sometime maybe by Tuesday next week, because I know under the standing orders, you can have some waivers in terms of how fast a bill can be read and passed by Parliament. Yeah. So, but we've definitely got to watch what the finance bill says, because the other thing about it is the implementation aspects.
Yes.
When you talk about 24,000 shillings being tax-free, so does that mean that the bands also expand to the bands of 24,000, for example? Or how is it going to be implemented? For how long is this going to be?
Okay.
Yeah, we need some clarity on that.
Robert, looking at the proposals, I was a bit concerned that it sounded to me like, if I could call it a bailout package for people in the formal segment of the economy, and largely leaving out the informal, because if I'm in the informal segment, they have no records. They don't know that I get this amount, but I still need a cushion because I'm a Kenyan like any other. I'm suffering all these repercussions. Did you get the same sense?
Yes, I think what the president announced was focused more on the formal sector, because talking about PAYE reliefs, talking about, for example, corporations getting a lower tax rate, talking about SMEs paying 1% instead of 3%. So that's all well and good for the formal sector. However, for this guy who relies on a daily wage, how do you reach out to him? How do you, how does that intervention get to him? And what I've seen from other countries is they're saying we should effect cash transfers so that you have a payout to these individuals so that you can cushion them from these impacts. So I agree with you. The informal sector, which accounts for a significant amount of the jobs in this economy,
Correct,
has not been catered for fully.
Looking at the proposal on turnover tax to bring it down from 3% to 1%, what kind of a boost do you think this will have? Because of course there's a question of if this business is already not operating anyway, because of course there's no traffic in the main urban centers, what turnover are they now being given a cushion on?
Well, you see, my English teacher told me never to look a gift horse in the mouth. So certainly a 2% reduction is still a good thing. But you do raise an important point, because if, for example, there's this lockdown or the curfew, and I'm not able to go to the shop past 7 p.m., what does that mean for that shopkeeper? What does that mean for the matatu conductor or driver who needs to be home? So there's an issue around, yes, we've given you a rebate in terms of the tax payable, but is there enough trade or business happening in order for you to even feel that cushion? Yeah,
I see. And some of the proposals, when you look at something like pending bills, VAT refund arrears, they are being packaged as a stimulus, but really, when you're settling arrears, this is not a stimulus, to be honest. This is money which you owe me and you're supposed to have paid me earlier. Do you feel that perhaps we are expecting so much cushion where actually we won't feel much of an impact?
I think there's still going to be an impact, Julians, because what you're looking at here is, even though you are owed these funds by government, it is important that you get these funds as soon as possible. Now, if you look at the guys who are entitled to these VAT refunds, predominantly manufacturers who export and the agricultural space, flowers and these kind of guys. So those are the guys who are hurting most. They need the cash right now to keep these employees engaged. So for me, even though, yes, it's still you are entitled to the funds in the first place, it will be a very good thing for government to release these funds and ensure that there is circulation in the economy. And you also have to look at it not just as just VAT refunds, but on a wider scale. When you think about the other measures that are being put in place, central bank announcing a reduction in the cash reserve ratio, which basically means that banks have more money to lend and support businesses. So if you use all these avenues to inject liquidity into the market, then I suppose you should have some level of cushioning happening.
I see. And one thing which a number of us were expecting but we didn't see, there has been the discussion that perhaps it is time that Kenya got back to the negotiating table with these bilateral creditors, I mean the Chinas, the Japans and the likes, and discuss debt rescheduling for 2020. Nothing was mentioned in this case. Were you expecting this, or did you feel perhaps we'll be going too far if we decide to take that route?
Yes, I was certainly expecting to hear a bit of that, and I would imagine that the policymakers are actually thinking about that, because if you ask me, where will government get funds to finance this, shall I call it a bailout package? Now, if you think about it, this financial year we're going to pay about what, 200 and so billion in loans. So if you are to redirect that, if you are to get a moratorium on the repayment of those loans and redirect that into the economy, you're talking about a significant boost. So in as much as we didn't hear it yesterday, I would like to think that Treasury mandarins and policymakers are actually looking at these options and saying we've got to put all options on the table. None of them is off the table. Let's look at how we can support this economy, because we need to support this economy and ensure that it doesn't suffer unnecessarily in terms of the economic impact.
Robert, a question out of public interest. The PAYE reduction from 30 to 25%, in terms of the quantum of what is in my account, what does this translate to?
Well, for the 5%, for those people who earn more than 47,000 shillings, maybe just it's important to highlight here that you hit the 30% tax bracket when you earn more than 47,000 shillings in a month. So depending on how much higher than 47,000 shillings you earn, then you're talking about a 5% differential, which is good. For me, in fact, the bigger question would be, yes, we have given a rebate of 24,000 shillings for people who earn 24,000 shillings and below. But if you do the math, you're talking about roughly 1,500 shillings impact per month. Now, if you think about it, a packet of unga ya ugali costs about what? 130 shillings or thereabouts. So you're talking about maybe 8 or 9 packets of unga from that. So it's not as much as you would have thought, but I think it's still something. It's something that we should be grateful for the government for doing.
And a question which has been bothering my mind ever since we had the president give his speech yesterday, where does this leave KRA? Because KRA clearly had its revenue targets, and if you look at the numbers which have been coming in up till about February, we're already missing our targets. And now with this tax slashes and kind of subsidies being extended, of course, the government is a bit stretched. Where does this leave KRA in terms of its targets? No,
without a doubt, the Revenue Authority targets will have to be reviewed and relooked at, because it would be crazy to imagine that Revenue Authority will meet its targets. I think it's going to be something that government is watching continuously in order to revise these targets downwards to a reasonable amount. And the reason why I'm saying that is, if you look at the measures that were announced, it was largely income tax and VAT.
Correct.
Now, there's also going to be some few changes here and there. If you think about the ban of importation of mitumbas, you're talking about customs duty, VAT, they are going down. So all these measures are likely to reduce the amount of revenue collected by Revenue Authority as a country. And I think that is important to bear in mind. Otherwise, you'll be setting up Revenue Authority for failure. But having said that, I think it's important to say that it gives us a good opportunity as a country to reevaluate our capacity to collect taxes in this country.
Yeah.
Are we actually overestimating the amount of taxes that are there that should be accounted? And for me, for example, if you say you want to pass on this stimulus package to the informal sector, maybe by way of cash transfers to M-Pesa, M-Pesa, then that gives you a very good idea of the population that needs to be supported, and which you can then go back to collect additional taxes into the future. So I think also there's an opportunity for Revenue Authority to broaden its horizons in terms of tax collections.
Let's talk about the corporation tax, and in terms of the year end of various companies. Some close the year on Dec 31st, some close in March like Safaricom. When you look at the proposals that were tabled by the president, how do you feel this will impact the various companies depending on when they close their financial year?
That's a very good question, Julian, because like we said, those proposals were the president talked about with immediate effect. Now, what that tells me is that assuming all the law is put in place and the procedures are followed, for a company like Safaricom with 31 March year end, I would expect that they would pay tax at 25% as opposed to 30%. Now that's a big saving for the company, and hopefully that will then permeate into the local economy. And then you've got others who have got June year ends, who've got December year ends. We've got to be very careful here about the equity aspect of this rebate, because if I'm a December year end, say for example, Equity Bank, which has just recently announced its results, should they be paying tax for the year 2019 based on 25%? And this is important because this payment is due on 30th of April 2020.
Correct.
By which time I'm sure the law will be in place.
Yeah.
So which rate do you apply? And then once you apply that, should it then apply to everybody in the country, so that everybody has got an opportunity to apply the 25% rate, and not having some people getting to the year end and this rate has then been revised? So I think a lot of that will have to be in the detail and the wording of the finance bill and the Finance Act, really. But I expect that should be clarified. Quickly
before I hand over to Gladys, some have argued that persons with disabilities as a special interest group have been left out of this package. What do you think?
No, actually, I think although they were not mentioned by the president specifically yesterday, if you look at the Persons with Disabilities Act, if you're qualified and registered as a person with disabilities, then the first 150,000 shillings is tax-free. So to my mind, those guys are already enjoying at least a tax rebate, if you like. And therefore, for me, the fact that they were not mentioned really is not a big issue, because they're already enjoying that. In fact, my view would be, if you are that kind of a person, get a certificate, get the tax exemption, enjoy that benefit.
Something which we've had a lot being asked around is that many Kenyans were anticipating that there would be a raft of proposals around medical supplies or goods which are really in the medical space at this particular point, considering it's COVID-19. Of course, we do appreciate there's a bit of preferential treatment already in the tax structure. But were you expecting this, and what did you think about this?
Yeah, so for the medical aspect, I think we shouldn't write it off, because remember, these are just proposals by the president. There's nothing that stops the National Treasury to say, or Ministry of Health for that matter, to say, we also want you to include this, and I'm sure stakeholders are giving in their inputs. So that's number one. But like you correctly said, a lot of these things were anyway subject to 0% customs duty, 0% VAT. Yeah. So it's really a question of, can we expedite the importation of this equipment, these devices, so that we can support the fight against COVID. Okay. So I'm not really surprised that there weren't specific measures, but again, I wouldn't also be surprised to see specific measures being included in this bill that will be approved by Parliament.
I see. And Robert, I know it's a bit too early to tell, but we have seen stimulus packages in other economies. If you look at the States, for example, the United States, I should say for that matter, is about $2 trillion. And many are now asking, considering the kind of revision we have seen from the central bank, it said earlier in January the growth would be at 6.2%. It's now talking about 3.4%. It's gone down by as much as, let's say, half. What do you expect when you saw what was being proposed yesterday? Did you think it measures up to the events we are facing right now in terms of cushioning the economy and countervailing the downside risk, for that matter?
So my view is that even though it might not measure up, these are the initial measures. And what we have seen in other countries is that they are sort of adopting piecemeal approaches. You know, you don't want to also shock the system. So we put in place these measures. Let's have a look at how well they are working. We've just talked about not addressing the informal sector. Perhaps the next round of measures will address that sector. So my view is that we've got to have a measured approach, and I actually agree with government's approach in this. Let's have a measured approach so that we are not going hammer and tongs at this issue and confusing everything that is happening. I think if you look at what the central bank has actually said, a lot of people are saying, why don't you decrease the CBR rate to a much lower?
Yes.
And if you had the governor, he said, no, let's look at this step by step so that we can address specific needs as they arise. So my view is that this is a decent and reasonable approach by government.
A very interesting proposal from the president yesterday, and still going back to the issue of the central bank, was that suspension of CRB listing, Credit Reference Bureau listing for anyone who then was having an effective loan as of, I think it was April 1st, as guided by the president. Do you feel this creates a scenario where we could be having what economists call a moral hazard, where, of course, the circumstances are indeed extraordinary, but the moment then we suspend this listing, then are we incentivizing a bit of reckless tapping into debt and expenditure? Because already we had a bit of a challenge as far as this is concerned, if you look at all the reports focusing on this digital loans being extended out here.
Yeah, I think you can't rule out that moral hazard, as you call it. The only question that I have is, would anybody in their right minds willingly default on these loans given the circumstances? And I think the answer to that would be possibly no. Why? Because the little finances that you have, you'd possibly channel them or at least use them in a reasonable manner, in the sense that you need to address your immediate needs. So you possibly have luxurious spending taking a backseat because you need to provide for your basic needs. So it's unlikely that people will abuse that. However, the fact of the matter is, with the economy not doing as well as we expected, and with people perhaps not earning as much as they used to, without a doubt there will be defaults. And the question then becomes, how will we restructure these defaults? How do we help people come out of these defaults? Because at the end of the day, you want to stimulate lending and borrowing in the economy in order to stimulate the economy. So it's got to be a very balanced approach, I think. But you cannot, of course, rule out people who will take advantage of this.
I see. And we've been talking in this economy around the subject of fiscal consolidation and the need to trim government expenditure, rationalize the wage bill. Yesterday, we saw the president proposing 80% pay cut for himself and the deputy president, 30% for cabinet secretaries, and a number of other tax pay cuts. Do you feel that finally, at least COVID-19, on the silver lining side, is finally bringing us to the senses around what fiscal consolidation actually means?
Yeah, I think it certainly is. Maybe forcing our hand, as you correctly said. But like you, in our earlier conversation, perhaps this is a crisis that government should not waste. It's about time we look at this crisis and look at what are the opportunities that it presents, whether it's rationalization of expenditure, whether it's rationalization of borrowing. How do we deal with the common problems that we've not been able to deal with for a long time, including the issue that we were discussing earlier on about expanding the tax base. Yeah. How do we, as a country, look at the opportunities that this pandemic presents, and how do we address this going forward? And we were just talking about the case of South Africa, which in part of the stimulus package has said we can defer the payment of the taxes to the extent that you're tax compliant. Yeah. And I think that's a very powerful tool, for taxpayers to ensure that they are compliant, so that they can get the breathing space that they badly need in terms of cash flow easing.
Speaking about cash flow, and I want to get your sense around how far can KRA go as far as this is concerned? Because right now, the pressing need is for us, of course, to mobilize resources and be able to respond to this emergency. How far, because we know of cases upon cases in the tax tribunal, for example, whether it's Keroche, whether it's Ushindi yesterday, and KRA is always locked up in this matter. How far do you think KRA can go as far as mopping up some of this cash and perhaps reaching an agreement with some of these people, just to ensure that at least in this particular situation where we really need cash, we're actually generating, or rather raising as much as we can?
Yeah, I think there's an opportunity for Revenue Authority to make the best of the situation, really, because the fact of the matter is that if there are funds or there are tax disputes that are held up in the justice system, can Revenue Authority call these taxpayers around the table and say, listen, can we have a negotiated settlement around these issues? Can we concede on this and you concede on the other, so that we can collect this money? Remember, at the end of the day, what government is trying to do is show up as much revenue as possible in order to be able to finance the economic stimulus that it has announced. Yeah. And if you look at some jurisdictions, for example, India, one of the proposals that was announced, and by the way, most of these countries have announced their packages in this week.
Correct.
One of the proposals that has been announced is, if you've got a tax dispute, come to the table, let's have a conversation, let's negotiate how much you're going to pay. And to the extent that you pay it, for India they have said you pay it by end of March 2020. To the extent that you pay it, then we are willing to forego a certain portion. And possibly that's a golden opportunity for Revenue Authority to unlock the disputes that currently are clogging our justice system. So there is an opportunity.
I see. In many of these markets you're mentioning, whenever the fiscal stimulus plan is normally passed, one of the key things we look at is how the capital markets will react to it. Of course, I know that you might not be focusing on the capital markets, but the NSE is just about to open at about 9:30. What sort of reaction do you expect from the announcements which were pronounced yesterday? I mean, we saw the NSE 20 share index, which tracks the market's performance, plunge to 20-year low this week. We haven't seen it below 2,000 mark since 2002 thereabout. What kind of reaction do you expect?
I think the government is signaling its commitment to support the economy. So if I was to take a cue from other markets which have announced stimulus packages, I actually don't expect that the NSE will be any different. So I expect that investor confidence will now be reflected in perhaps a stabilizing of the markets and possibly a rallying of this index. And if I was to look at, for example, the foreign exchange, the exchange rate for the dollar, if you notice, when the first cases were announced, it really went down, I think, up to about 107 point something, but now it's stabilized at about 105, 106. So if that is anything to go by, I expect that the markets will also calm the jitters as we watch the impact of this stimulus package by government.
I see. I wish we had the time to delve into the CBK story, but that's a story for another day. I want to go back to the subject of VAT. Many of us did not expect VAT to be touched because of all the taxes, this is the one which enables the government to reach the widest mass in a population where the bulk of the taxpayers are not being touched. Rather, the tax base is not as wide as it should be. Were you surprised by yesterday's move, and did you expect perhaps a larger slash than from 16 to 14%, or how did you take it?
So I was really not surprised because if you want to impact the society and the economy at large, it's about spending. So if you can reduce the cost of my products, even by that 2 percentage points, it does add up at the end of the day. Not forgetting that VAT accounts for roughly 25% of the total tax collections,
exactly.
About half a trillion shillings. So that was a welcome move. Now, do I expect that should we have seen additional measures? I think it would have been nice to see measures around the petroleum sector in terms of VAT on that. Remember, there's been a dampening of the demand because of the transport going down. So you want to try and support that sector as well. But overall, I think the VAT proposal, you asked, should we have had a larger drop?
Slash, yes.
Yeah, I think the way government looked at it is, listen, we need to mobilize as much money as possible, and the only way to do that is to reduce the cost of consumables or products to the common mwananchi, so that we can drive demand and try and at least collect the same amount of tax that we normally collect at 16%. Yes, but I also think it's a very interesting experiment in the sense that how volatile is VAT? At the end of the financial year, I would want to see the performance following this slash, and therefore evaluate the possibility of this country using VAT, perhaps even raising it in the future, who knows, to drive more revenues and leave, like what Hungary has done, leave more money in the pockets of people so that they can spend more, and you can continue collecting more VAT.
Clearly, going back to the subject of disposable income, I want us to share something. There was this proposal that, of course, yesterday's proposals largely touched on the formal economy. What about the informal? And the subject of cash transfers has come out quite prominently. But the question always being asked is, in an economy where the bulk of the population is in the informal segment, even if you're to dispatch cash transfers, how do you access these people?
I think the solution has to be mobile money. That really is the solution, and because there's infrastructure around mobile money, we are told that the amount of accounts, M-Pesa accounts and Airtel Money accounts is about 22 or so million accounts. Yeah. So I think that presents a very, very good avenue to reach out to these people. And like we've argued before, potentially roping these guys into the tax bracket. So potentially you could ask people, please complete a simple form on mobile, and we will release some money to you. We'll possibly give you a loan of 3,000 shillings. I think India is doing about 5,700 rupees, which is about 15,000.
With interest or interest-free?
Interest-free.
Okay.
You can do interest-free, because what you're looking to do is to support these fellows in the economy. And then perhaps people can repay over a period of time. So what you do is that you also get a very, very interesting database that you can utilize in terms of developing your tax policy on a go-forward basis.
I see. A friend of mine tabled a very interesting question on Twitter yesterday, that what if instead of all these measures the government proposed, what if the government just floated a disaster response bond at 1% yield or return per year? Do you think Kenyans would have had the appetite to take up this security?
Well, I don't know. 1% essentially means that you're asking people to
be philanthropic.
Yes, exactly.
But the times are extraordinary, to be honest.
No, true. And possibly there are corporations who would do that and possibly incentivize people to do that. And, I keep referring to other jurisdictions, what other jurisdictions have done. Again, South Africa, they have given a tax break for philanthropic donations. In our country, we have provisions that allow philanthropic donations on a tax-free basis, but you've got to jump through a couple of hoops. So what possibly we need to do is, even as you are floating that kind of a bond, say if you invest in this, then this is the tax break that you potentially are entitled to for a longer period of time, and possibly that will ease government pressure in terms of revenue collections.
Okay.
Yeah.
Getting to the tail end of our conversation, earlier, before this fiscal measures, we saw the government engage the central bank, of course, Kenya Bankers Association. There was agreements towards things like moratoria for borrowers, etc. To what extent do you feel this will cushion the economy in light of the situation?
Let me first of all start by saying that that's not something entirely new. Again, across the globe, most governments have put in place moratoriums. Ireland, for example, has talked about a mortgage payment moratorium. They have talked about a rates payment moratorium for people who are paying rates to county governments. So, in my view, these kind of moratoriums are what are needed in order to have a lot of money in circulation and spur business and consumption, so that you can then keep industries going. Because at the end of the day, without consumption, you have no industry running. Without industry running, then we're talking about an economic disaster. So I do agree with those measures, and like we've said, it's not one solution for everything. It's about bringing to the table all solutions and all proposals, and let's have a look at what best works for this country. My final question, because we're out of time, Robert. How far do you see this going? I mean, we're in a situation which is unprecedented. No one actually seems to know where this, the depth or the trough of this will actually be. How far do you think the government can go in terms of injecting, tweaking a few things here and there to try and prop the economy? I think that's a very difficult question to answer, Julians, because we really don't know how long this is going to be. In fact, if you look at the U.S., they're talking about injecting $2 trillion into the economy. Yeah. And the UN has projected that the global economy will lose about $1 trillion worth of GDP. So if you look at that, chances are that this is going to extend for a longer period of time. And this is why I agreed initially in my comments that this stepped approach by government is very useful, because we need to have a look at these measures we put in place. Are they working? What is not working? What can we tweak? What additional things do we need to put in place? Those cash transfers that we've talked about. Yeah. So I think we've got to be in it for the long haul. I am sure and I'm positive that as a country we'll manage this coronavirus spread. However, the question is, how well will we fare in terms of supporting the economic recovery into the medium and long term?
I see. Right, and that's been my conversation, or our conversation, I should say, with Robert Waweru, who is the Associate Director of Tax and Regulatory Services from KPMG. We've been unpacking the raft of fiscal measures which the President tabled yesterday. Of course, they still have to go through Parliament for approval through a finance bill before they take effect. So the question of when does this take effect or not is still hanging out there, but clearly this is a matter of urgency which is being considered significantly by all agents of the state. The central bank has already acted. We've seen the Capital Markets Authority taking some action. We'll be looking to see what Parliament and the National Treasury put on the table when all this is said and done. For now, I hand you over back to Gladys.